The S&P 500 closed down 2.61%, giving back some of its gains from earlier in the year. The price action came all the way up to its quarterly expected move, and monthly expected move was looking very good but got rejected and closed right around the lows on the month. In today's video, we're going to go over the new monthly expected moves, get over a trade idea, and just some things that I see in the overall market taking place. Are the bulls throwing in the towel now? Are the bears taking charge? Let's get into it. All right, everybody, welcome back. So we're going to go ahead and get into the new monthly expected moves. These expected moves, think of them as a bell curve. Remember, 68% of the time, it closes within the expected move. The expected move for this next month, the month of March, we're looking at 41.61 for the upper level, and then we have 3779, so about 3,800 for the lower level for the expected move. Now the price action closed around its low, and it looks like we can have some follow through because we've been seeing some very interesting price action take place on a daily basis, but we'll get more in depth on that to see what we need to pay attention to moving forward. As far as the 11 sectors today, you can see here utilities was towards the bottom. That's typically a more defensive sector. Same there with consumer staples and healthcare. So despite seeing a down day in the markets, including volatility, it was more of a risk-on type behavior just looking here at those 11 sectors. But if we take a look at the 11 sectors at a quick glance, you can see that they're still all below the blue line, which is the 20-period moving average. So the bulls, yeah, the towel's thrown a little bit. The bears are taking charge, including even on these more defensive sectors down here. They don't look good at all right now. But so we need to see those obviously recovered. If we take a look at the daily price action on a 2-minute time frame, it was very interesting trading day today. You can see a lot of chop out of the gates, and then we finally broke up higher out of this little flag. And this right here, I was paying attention to this breakdown intraday. Bam, that came on big volume. So if you see stuff like that where we get a consolidation and a big break, be careful. And then price action just kind of went sideways right here, kind of creating a cliff. You can see it broke down, it bounced, came back to back test it, came back, and then finally flushed through that area. And then boom, we saw some massive sell side activity today into the closing bell and into the end of the month. And it's also following, more into the after hours trading session too. So we'll see here where the market opens up. We could still, rally back here towards the open on tomorrow's trading day. If we take a look at the 15-minute time frame, you can see here, the 5-day moving average is going to be one to continue to pay attention to. It started flattening out over here, but the price action as it stands is still below it. Okay, we're below that. We're below the week-to-date anchored VWAP, and we're below the year-to-date anchored VWAP. So there's a bunch of things that you can look at right here. You can call this, people calling it a diamond pattern. You're calling it a, potential, broadening wedge pattern where it broke down and we can see more price action down to the lower weekly expected move. You can just call it just a chop box, which it really is more of a chop box where you have a bunch of open interest building up in here where we're going to probably get a decisive break at some point. So the key levels that I was paying attention to was this low right here, which from yesterday, and it did get taken out. So that's a pretty bearish sign that opens the door to potentially come touch this low over here, which was last week's trading low. So if it does come down here, this may act as a level of potential support, but you want to see what price does around and through that level. As it stands right now, if you are bullish, you want to see, price action get back above that 5-day, get back above the week-to-date anchored VWAP, and then we got to come for that, obviously, year-to-date anchored VWAP. So it's a very neutral stance right now, so it's just a time we need to be cautious. If we take a look at the daily time frame, we're still holding that golden zone up here, which is the retracement, 50 to 61.8% retracement from those levels. And you can see here we came up to that year-to-date anchored VWAP, but it's still pushed off of it, okay? Ignore the purple line. I forgot to take that off the screen. Now, and we're also in confluence with a bunch of different things. So there's still a possibility that we bounce here, but the bulls are going to have to step up at some point fairly soon. If we take a look at the yield curve, this thing is now 89 basis points inverted, pointing pretty much straight down. As you can see, the short end of the curve, or the short, the 2-year, and then the 3-month, and I don't have the 1 year on here, but those things are firing off like rocket ships, where the 10-year yield, the 20-year yield, the 30-year yield are kind of rather muted as it stands. And, if we take a look at the 10-year, 2-year curve, you can see here we haven't been through these levels since really the early 80s. And this right here, as we've seen the 10-year yield kind of back off slightly today, that's good for gold. And you can see gold actually we talked about yesterday, and we're seeing a little bit of a bounce through this support zone in here. So we'll see if we get some continuation, making it for a pretty positive trade there for gold, potential swing trade. And as the 10-year yield, if they do start to flatten out or come down, it could offer up an opportunity for as well TLT. So you might see a potential move higher in TLT. Right now it's just consolidating. We see the price percent oscillator starting to curl itself over. It's still below that 0 marker, but that could be one to watch there too as well. This all happened too on the back of a rising dollar today. So even though the dollar was up, you still had gold perform pretty well, which we had discussed prior. So I'm not gonna get too much into that, but if the dollar does start backing off, that could even add more oomph to gold and also potentially help the S&P 500 out and various other assets. Going into tomorrow's trading session, we have ISM manufacturing PMI coming out 30 minutes after the market open, the cash market open. So that is going to be one to pay attention to, because if you're intraday trading and you don't have stops in place, or you're not paying attention to when these macro drops take place, you can see some wild price action very quickly take place. Now I'll go over a quick trade idea here that I shared with my Patreon group. If you're not in the Patreon group, it's $9 a month, or you can pay annually to get a discount. It ends up being like $9 a month for this, or if you want to do annually, it's $90. You get access to my watch list, trade ideas, weekly expected moves. You get the zones, my stock market indicators that I share with you here on the charts, and then you get access to the community. One of the trade ideas that I just posted is more of a, calling out that Pfizer has been on this massive move to the downside. We know that healthcare's over here, has been getting completely beat up. But what I did notice here today is we saw some big volume with a hammer candle at a prior area of support, while that RSI is starting to flatten out here, but it's still an oversold condition. So if the high gets taken out going into tomorrow, you may be able to go into a shorter time frame chart, such as the 15-minute, the 2-minute, depending on your kind of trading style, the 5-minute, the 10-minute, whatever. And if we take out the high, which is at 40.71, it may open the door for a potential pop, and that could be an opportunity. I don't know how high it can go, but maybe, hey, you play it to 43 for a swing trade, or if you're playing intraday, maybe you're just paying it for a 20 cents, 30 cents, 50 cents, even $1 possibility if we do start to get a bounce from this level. That's all I got for you on today's stock market brief, everybody. Have a wonderful night.